What's up, everyone? I just want to ask, how many of you have ever entered a trade that you were in profits, the market starts pulling back on you, and you're fearful to give back those profits, that you exit the trade early to protect yourself in fear, and then the market eventually goes to your target and you would have made a lot more profits if you just held and followed your plan? Or how many of you ever entered a trade, held past your stop loss because you never accepted the loss to begin with, and a small loss turns into a really large loss because you disobeyed your stop loss? Now in this video, this is just going to be a raw talk, unedited, unscripted, of me just going over how to master fear and how to develop confidence in your trading. That way we can manage trades better. Now, the first thing that I really want to talk about, and there's two main methods to have the confidence. There's two main methods to stop being so fearful or even greedy in your trading. Number one is obvious, it's simple, but it's so crucial. And that's just simply having a trading plan that is predetermined before entering the trade. So the steps in how I open up a position is as follows. Number one, I have a level of interest, or I have a scenario that I'm watching that the market may be coming into. Number two is I am looking for a confirmation signal or an entry point around this level of interest. Now, within a couple of split seconds, what gets done from the entry point to the actual me clicking the buy button on my keyboard is this. Once I see that confirmation point, I'm now trying to develop a plan that if I enter at this exact moment, where is my stop loss going to get placed? Now, when I see that confirmation signal, this has to go through my head that if I enter, let's just say at $100, where am I wrong on this analysis? If I am seeing, call it buyers at $100, just to make it simple, no matter what stock or instrument or future contract, option contract you trade, if I'm seeing buyers, let's just say at $100, well, if I were to enter right there at that moment at $100, where am I going to be incorrect, or where is my thesis invalidated? This is where the stop loss has to be placed. Now, if I enter at $100, and let's just say $99 is, if I feel if the market breaks under 99, then my analysis is completely wrong, and how I was viewing those buyers that maybe take a bullish positions is just incorrect. Now, on top of this, we have to understand, where is our target? The targets have to be placed at an area where the market could reverse, or where it proves our analysis to be correct. Now, targets could be static, meaning we could always get more than our targets, but we want to have our stop loss and target in mind, static target to say, before we enter that trade. And this has to get done in that split second before we click the buy button, but while we see the confirmation signal. This is just something that gets done and analyzed in my head. I guess you could say second nature now, since I've been trading for 9 years. Once this is done, this is our predetermined plan before we click that buy or sell button. When we have this predetermined plan, there is zero outcome that is going to affect us that is not already known before entering that trade. Now, what I mean by this is, when I enter the position, I know where my stop loss is going to be placed. If I know where my stop loss is, I know how much money I'm going to lose if my thesis is invalid and I stop out of that trade for a loss. This is known before I enter the setup. With this in mind, I wouldn't open up a trade where I see that entry signal around my level of interest, and before I click that buy button or sell button, I'm not going to open that trade if the risk is way too high or more than my risk tolerance or my risk allowance according to my account. So when I enter the trade, I've already accepted the loss if I am wrong on it, because if I didn't accept it, then it's a trade that I just would not take and that I should be completely avoiding. But before I enter the trade, I know worst case scenario, if I stop out and I'm wrong on this, and it's just a completely wrong analysis and I'm not understanding what's going on, well, the worst case scenario is my stop loss is going to hit, and it's predetermined how much money I'm going to lose if I am wrong on that. Now, target, obviously, we have to have a static target, but we're maintaining at least a minimum 2-to-1 risk to reward ratio, and anything above that is going to be a bonus, or it's going to be just additional income, we could say, that we really didn't plan for. With this in mind, We can manage the trade so much better if we just follow this predetermined plan that we've accepted the unknown outcomes before we've entered the market. Think about this. The market is not always going to go straight up to our target. We're long at $100. It's not always going to go straight up to our target, call it $110. There's going to be detours, let's just say. There's going to be bumps in the road. There's going to be speed bumps that we have to drive over. If the market always went in our direction with no drawdown, no pullbacks, no periods of consolidation, then there just would not be a market. So understand that when you're in a trade, it's not always going to go directly to your target. There's going to be periods where you're in profit, call it $100. The market may pull back on you and that $100 now only turned into $10. But if you maintain in that plan and in that trade and you follow your predetermined plan that you created, that pullback from $100 to $10 in profits should not affect you or not freak you out. This has helped me tremendously. This has helped so many other traders that listen to this advice. There are only two ways that you should sell a position. Number one is if your stop loss hits, or number two, if your target triggers. Everything else is noise. Everything else is complete garbage that our mind is going to try to protect us at all costs, or we're going to do things that we're acting upon our emotions to try to protect ourselves. Our brain does not like pain. Our brain only likes to be rewarded and feel fulfilled. So if we experience, I guess you could say, some type of mental pain where we had a large profit turn into a smaller profit, and our brain is going to try to protect us. Our brain's going to say, Carmine, get out of that trade right now. Protect yourself. Take the profits while you can. But our brain is going to make us make stupid decisions, but our predetermined plan was entered before we've entered that setup, or our predetermined plan was known before we've entered that setup, that everything else is noise, it's out of our control, and we have to control what we can control, and that's our plan. And what's easier is that understanding pullbacks, consolidation, drawdowns, being in a loss before a trade goes green on you is completely normal. Now, what keeps you in that trade is just following your plan. Now, let's look back at this trade that I took on February 5th. This was a $26,000 profit that I took on the S&P 500 futures. I got long at 60.42. My stop loss was at 60.40, and I was going for a 14-point reward at 60.56 on the S&P 500 future contracts. And again, this was a $26,000 profit and about a 5-to-1 risk to reward ratio. Now, there's a couple things with this trade, and I'm going to replay this setup for you here because there was a lot of commentary that was going through my mind to try to get me out of this trade, or traders in my community that saw me in this long trade around 10:30 on the 2nd of February. I got long on the pullback on the S&P. There was a lot of commentary that people were telling me to get out of the trade, and it was all noise, but I had to follow my plan. And by me following my plan, it rewarded me extremely well. So just really fast, to understand this setup a lot better, there's multiple pieces of confluence. And again, this is the predetermined plan that I come up with before I enter the setup. Number one is the market had this uptrending line where we've bounced off the market once, twice, 3 times, and now we're pulling back perfectly into this downtrend line. Number two, we have VWAP, which is the purple line. Number three, there's significant, which is drawn by this green box here, order flow activity at this 60.45, 60.43 level. Now, what I mean by that is, if we were to look at the Delta footprint chart, you see a negative Delta outlier of minus 333. And if I were to zoom to the right, that's at 60.43. And then to the right here at 418 Delta outlier, positive Delta, more trades hitting the offer than the bid here at the same exact price at 60.43. So zooming out, this 60.43 level was just something significant in the order flow. On top of all this, 60.43, what I just mentioned earlier, this was the first negative delta of minus 334. And then point number two was the positive delta of 400 something. And this was getting transacted at 60.43 as the market was selling off into this. There was some significant sell volume. We could see it highlighted here in the blue and by larger red bubbles. Someone was selling into this. So this 60.43 was a level of interest that got developed with multiple pieces of confluence that should be something that I am watching. Now, replaying this data, the market's going to sell off and I find an entry long at this exact moment, placing my stop loss under this area of order flow at 60.40. So it was about a 2-point stop loss, longing that dip into this trend line at my level of interest with the buying activity on the order flow. My stop loss is at under 60.40. This is known before I enter. As soon as I'm comfortable with the risk and find an entry signal with my target in mind, my target was the high of day, which is this green line at 60.56, 55. My plan is in play. When my plan is in play and I have the confirmation signal, I am clicking that buy button or sell button if we're looking to short the market. And then everything else is out of my control. Now, fast forwarding this replay and just going to this chart, there were multiple times that the market pulled back on me. So with my target being the high of day, which is right where my cursor's at 60.55, there were many times the market came very close to the high of day. In fact, it came almost 1 point away from the high of day here, around 10.43 where my cursor's at. So at 1 point, we came 1 point shy of my target triggering, and I was in profit 12 points, 13 points. And the size that I'm trading, 12, 13 points, is significant profit. Now that 12-point winner on the S&P, we get the pullback much lower around 60.47. And this is around 10:49 a.m. Eastern time. So if I were to just go back to this replay, we'll go to 10:49 and you'll understand what's in my head at that exact moment. So there's my entry. The green line's my target. The market pulls back on me. And in fact, we break under this uptrend line. Now at this moment, I'm sure a lot of traders would be freaking out. They would be saying, let me sell this trade. It's pulling back on me. The trend's breaking. This is looking very bearish. This is looking very weak at this exact moment. I mean, you cannot deny that it doesn't look weak. But my plan was in play before I entered. I can't control what the market's going to do right here. My target didn't hit, nor did the market come near my stop loss. So I was in profit at this point around 17K, I want to say, and it pulled back on me and I was only in profit like $5,000 or $6,000. So I lost about $11,000 in, I guess you could say, profits that I never had on this pullback. And then the market goes back up towards this high, and I'm going to speed this replay up even more. We go back up and so the market rejects this downtrend line again and it pulls back on me, and I was up $15,000 in profit. Now it went down to like $9,000 and everybody's like, Carmine, stop being stubborn. And even pulling up my commentary here, there was a point where I said I could even stop out for profit and be green on the session and make one win outweigh two losers. But that's not trading. That's not following my plan. I know this is something that a lot of traders do. Just need to follow the plan. It'll all be worth it, especially when you're correct on your analysis over a period of many trades, not just one. For example, if I stop out here for a win before my target triggers, I'll be green on the day. But if I follow my plan and my plan actually works and my target does hit, I will be really green. Have to do the latter all the time and not let emotions try to tell you. It sounds good exiting here for a small win, but it sounds even better if my target hits, I follow my original plan, and it turns into a 16-point winner. Pick your poison, doing more damage over the long run if you change your plan in fear or greed of profits. Now, the market went up, and I got full out of the trade as it was breaking out. And there's no reason to stop out just to lock in profits because you're scared to give back gains or take losses. This is so crucial, and this will only occur if you follow the plan. Watch here when the market breaks the high a day. 2 pullbacks where I sat in, followed my plan, didn't freak out. The market breaks the high a day into my target, and I get all out of this trade right here and call it a win. Now, another method to do, maybe this is I guess they're kind of synonymous, is size down. Size down. If you have a hard time following your predetermined plan, maybe you're saying, Carmine, I have a predetermined plan, but I'm having a hard time following it. Size down. Maybe you're risking way too much money. Maybe your emotions are doing the trading for you because you're in with way too much size that your P&L is affecting your decision making, or you're trading your full account size and one red candle down freaks you out. And you're like, oh, I don't want to lose on this trade. I have to be right. I took 3 losing trades in a row. I don't want to take 4 of them. And I have to be right here. Let me sell this trade for a quick profit because I want to be green on the session. That's not trading. That's going out and trading on a whim and you're gambling at that point. And that is not the way to trade. So if you have a plan and you try to follow it, but you can't follow it, size down. Sizing down helps tremendously. If I had to be honest, if I size up and I'm going in with, major risk, $7,000, $8,000, $9,000 per trade, I honestly trade differently. And that's why I'm not comfortable yet to increase my position size or increase my risk tolerance. Because as easy it is to follow the plan and not let your emotions do the trading, if you're over leveraging or you're in with way too much risk and position size, it will affect you. We're humans. We can't be completely robotic. We can't avoid certain emotions. They're always going to come out. But sizing down and finding a point that you're comfortable enough to follow the plan and not let losses affect you is where you have to be in your trading. So that's pretty much it. If you have any questions, let me know. If you like these like raw videos or just me being completely unscripted and real, let me know in the comments. If you're new to my channel, hit the subscribe button. And also check out my Instagram. I'll post a link for it in the description below. It's a good resource that I post daily trading recaps, really good trading tips and tricks that you're not going to find anywhere else. Link will be in the description below. But I'll see you all in the next one.